59.97, down by 2.1%. The broader all shares by 1.8, total value 20.6 billion. Decliners beating advancers 2-1. Joining us now for more would be Sandra Araullo, Chief Investment Officer of ATR Asset Management. Hi, Sandra. Good afternoon. Thank you so much for joining us.
Hi, good afternoon, Mimi, and good afternoon to all your viewers.
All right, so back to 5,900. We're failing to stay above 6,000, which is a psychological level for many investors. What do you make of the recent market moves?
We had MSCI rebalancing today, so that is a significant liquidity event. A month ago, we had the PSE rebalancing. And what it's telling us, based on how the market closed on these two days, is that there really is a seller. There's a big volume seller that's waiting for these liquidity events to carry out the selling that they need to do. It's really overdone, but there are drivers globally that's reinforcing the risk of sentiment, particularly around the announcements of tariffs by U.S. President Trump.
All right, but if you think it's the Trump that's the problem, why are other markets doing much better than us? Is it our size?
No, actually today you have Indonesia also down 2%. You have Thailand down I believe 3%. Hang Seng is down 3%. So it's really regionally there is rebalancing or flows out of emerging markets, you can say. The Philippines is collateral to that. You heard earlier your guest talking about the fundamentals being good actually, but we are a small fish in a big ocean, so to speak.
So are we expecting this sort of narrative for the next 4 years?
It remains to be seen. So actually, in the very short term, so it's hard to look too far ahead. We are still getting a sense of this whole Trump 2.0. We have a playbook to refer to, but we are also encountering some differences. So, for example, on the threat of tariffs, actually, in hindsight, back then, same rhetoric, but he didn't really have the ability to carry it out. Now, the threats are more real, but we've seen how the negotiation approach. So the implementation will be on March 4. So a lot of pricing in is happening now. A lot of and there are also other drivers. So for example, in the US, you had jobless or the jobs report, kind of showing some cracks in the economy, and it's putting the Fed in this really precarious situation. So I mean, these are all playing a part in how money is flowing in the system. There's a lot of dispersion actually in investors' strategies. Some are flowing still to the US. Some are kind of reassessing that, considering that in a few months' time the recession narrative might come up again, and we're already anticipating that from the jobs data. So yes, it is a big driver what's happening in the rest of the world. While the fundamentals are sound, it's not enough to really overcome the negative sentiment that we're seeing in the market.
So what is the advice to investors today? Do they wait this out, or do they pick up stocks? If yes, which stocks? Everybody's talking about buying stocks that pay you to wait.
The age-old wisdom, right? Buy when everyone is afraid and sell when people are greedy. And what's the environment now? There's a lot of fear that is being priced in. So sound investment advice would be to understand the reasons for why one is investing, and as far as we're concerned, the economy is and the companies are doing well. We are in a good position to sustain earnings growth, no, for corporates. In fact, we're monitoring the earnings season, and it is coming in stronger on a quarter-on-quarter basis. On a year-on-year basis, we're seeing about an 8% increase so far. A tad below 10%, which is what the market expects, but it's still pretty early in the reporting season. No? Those who have reported, about I believe about 7 would be in line. Meralco outperformed. So there are still more companies that will be reporting, and it can still set the tone. So again, this will be a stock pickers market. So that's where the value of active management does come in.
Sandra, speaking of earnings, we have this just in from Ayala Land reporting let me just try to do this mentally, the mental math. They did report, let me just look for it. Net income for the year 2024 coming in at 34.2 billion pesos. That is up, I think, about 17% from 2023. You think this is okay from a property company? This is pretty good, right? Considering all the bad news that we've been hearing, the 34-month supply glut in condominium, the weak office take-up, this is pretty good.
Yes. So it's really highlighting the disconnect between price and value. There's a lot of value. It's not being reflected in the price. And we will look back in this time, and if you don't do anything, it's a missed opportunity. And if one would just stick to a disciplined approach to investing, deploying on a regular basis, buying when price is below value, and all of these investing principles, putting it into action, then that will not be a missed opportunity.
All right. And final question, your view on the peso. We have been trading within the 57, 58 range. What do you think the next couple of months?
We think that we're past this stage of precarious level for the peso against the dollar, no? So we weakened close to almost hitting 60, 59. That is very much a line on the sand that even the BSP is vigilant of not letting the peso move past that. So we're we're past that, moving in that direction. And the strengthening that we're seeing now is a result of the most recent BSP decision to keep rates on hold and not cut. In hindsight, while it caught the market a little bit by surprise, just relative to the communications that have been taking place prior to the decision, in hindsight, it was the right decision to make, and it is helping relieve some of the negativity around currency weakness. But then again, the currency weakness would have made it worse even worse for the Philippine markets from a global investor's perspective. But at this point, I think it's really more of just taking risk off the table and not too much consideration on the more nuanced expectations around currency.
All right. And before we let you go, so it's the last day of February. When we go back next week, it's going to be March. Historically speaking, is March usually a good month for stock market traders?
It's really hard to go by history now because January was supposed to be a good month, no?
Yeah.
First quarter is generally supposed to be favorable. But again, many things are coming into play that are, we don't have a clear playbook for. So I think rather than looking at things on a month-to-month, I know I said it's hard to look past or it's hard to look beyond the near term. But in terms of execution, the long-term objectives still need to be intact. And the noise, so that the noise in the short term, it is going to happen. That's what we know that doesn't derail from sound execution of investment strategies.
All right. On that note, thank you very much, Sandra, for joining us. Always a pleasure to speak with you. We'll see you soon.
Thank you.
Here now is the latest in the run-up to the 2025 midterm.